How's it going, guys? It's Ralphie from Beyond the Huddle, and welcome to this week's Bitcoin forecast. As always, we're going to get started with the SMI, the Smart Money Sentiment Indicator, to see what the exchange data from the spot market has been telling us, whether they're accumulating or distributing. Then we'll go ahead and move on to the leverage market to look at the asset managers by looking at the COT. And that's what you see here in front of your charts. So then we can see how they're positioned and what we're thinking they're going to potentially do next. And then as always, we're going to wrap it up with some price action volume profile analysis using our BTH indicator, and then our USDT bias indicator. And then we can predict what could potentially happen next, again, based on price and combining that with the sentiment. So with that being said, let's get started. Okay, guys, so getting started here with the SMI, we're going to take a look at both the long-term and the short-term SMI. And the one thing I want to point out here was that a couple days ago, so we're on the 2nd of March now, so around the 27th and the 26th of February right here, you guys can see that the SMI turned slightly bearish. We were hitting the distribution. And when we hit that distribution, that's when Bitcoin then ended up, seeing so we hit some resistance in price. And then while we saw the distribution on the exchange market data, that was basically telling us that the short-term players were selling a lot more than what they were buying in the market here. And then that gave us the go ahead to imagine that we were going to go ahead and see a short-term move lower. And this drop right here fell about 11%. Now, the question here is, how was I supposed to know whether this was, just going to be a tiny retracement in the middle of this? You can see right here, strong accumulation right here, strong accumulation right here. And then that was, what ended up being the low. So it went swing high, swing low, move higher, consolidation, slight drop of about 11%, and then a very, very super aggressive move higher, okay? So the idea is how would I have known, right, the difference between the two? And when you look here at your long-term players, okay, you can definitely see that while the short-term players were the ones that caught this move right here off the resistance, you see this 11% move here, the long-term players were actually accumulating, and then they actually even hit strong accumulation for very briefly interval cycle. Okay, so you can see right there it hit one of these bars, turned strong accumulation, and that actually ended up being exactly at the low. So really, we want to be paying very close attention to what the market is doing. Is it hitting your support levels? Is there any reason to be a buyer when there's strong accumulation in this market? And that's why we love this indicator so much. So you can see right here when the long-term players say, hey, we're buying, you better be sure that you find a reason as to why, right? The market should reverse. And guess what? There was. And as I'll show later, is because of our USDT bias level. And we were also hitting the value or low using our BTH indicator for the volume profile. And then, we went straight off. Now, the interesting thing that's happening right now is that the long-term players are actually, well, we were at this high distributing, okay? So we were in distribution mode right here as we're hitting an important resistance, which again, I'll show you guys later when it comes to the volume and price part of the video. And when we look at the short-term players, they agreed with the long-term players, okay? So that way you can then think, when the short-term agree with the long-term, you can think it's not just going to be a temporary retracement, right? In this case right here, the short-term was telling you sell, right? They were distributing. If you're a resistance, you want to be potentially a seller, and the long-term players were telling you that they were accumulating still. So obviously that's why that was a short-lived moment. But right here, they're both saying the same exact thing. They're both in distribution, and now it's actually turned. So there's been a slight retracement within this consolidation, and now they've turned neutral. Okay, so the key here will be, how do we react at these important resistance levels that we'll cover later on in the video, and how will the sentiment here for the long-term and short-term players keep evolving as we spend more and more time here? Will they turn back to even higher amounts of distribution as the resistance levels gets respected, or will they then hit accumulation in the market? Right now we're turned neutral on both the short-term and the long-term players, so it'll be very, very interesting to see what they end up doing. So with that being said, now that we understand what the spot market players are doing based on the exchange data, let's go ahead and take a look at the COT so we can see what the leverage players in the asset managers have been up to. Okay, guys, so just real quick before we get further into the video, I don't know why I kept saying that this is an 11% move. I actually just double checked, and it's about an 8 point something percent move, and what you would have been able to get, obviously using our strategy, is about 6%. So that's a lot more likely and a lot more reasonable than the 11% I keep saying. Again, I have no clue why. So yeah, moving on here to the COT, that's the asset managers, the CME contracts in the leverage market. We have the asset manager longs have actually declined by 93 contracts. To a total of 6,025, and the shorts have actually increased by 103 if you look right here to 821. Now, again, obviously the question, as we ask every single week, is how does that change our percentage long? And obviously, if my memory is right, we have declined by 1 point something percent. So we were about 89 point something last week, and now we're down to 88. Again, still a healthy amount of percentage longs from these asset managers, and that's why, during these dips we've been so confident to say that the overall market is still not in a bear market. We're still in a bull market because the asset managers don't lie and they are still mostly long. So let's go into the charts to look at our COT indicators to see how we can get a better view on this data that just came through. Okay, so as we spoke about last week, we were going to look for two different things that could potentially happen when the data came out last week. So one of those things that could have happened was that the shorts right here could have kept dropping, okay? And you can see that's what they did back here in August, in September of so late August, early September of 2020, where they just kept dropping and never recovered. Or the second one would be what happened here after this drop in May, where the positions dropped, but then they consolidated at around the average of those shorts, okay? And then they stayed there a little bit until the market, they felt comfortable, and then they decided to add longs into the market, and then boom, straight up, okay? So, that is what happened, or those are two different scenarios. Now, I was betting on the fact that if we do come back, which we have, okay, you can see here that we went straight down, and now we have come back once for the average. That's actually, it does like to do that a lot. It likes to drop and then come back to the average. But I don't think it's going to sustain there for very long. And the reason why is that because it came back to the average, you can see right here that they were net long, and then they didn't spend much time, going below the average. Now, right here, when they went below the average and then they consolidated at it, you see how we were still net short, but look at what's happening right now. We're net long, and then they had a big drop, and now they're at around the average. So again, what I'm trying to say here is that because they've already made up their mind and they are well positioned long, and the price is expected to go higher as they lower their shorts, they don't want to mess around. They want to get the positions done quickly. Now, that's just my opinion. I could be wrong on that idea, but the whole point is every single week we'll get to find out and see what they're doing. And what we want to see now is for them to lower their shorts again, go back below the average, which after what just happened this week, this big, huge rally, I would be expecting these shorts to go down again. Okay. So right here, I'm kind of, I kind of know what to expect in the COT based on what price has done. Now, if the COT tells me they have increased shorts during this move higher, that will be an incredibly bearish move, and I will be expecting all these resistance levels that we're about to talk about in just a few minutes to then hold, and I would start to lean towards prices just keep consolidating, okay? Because obviously I wouldn't be expecting a bear market until we break below these lows here at around $30,000, that yearly value or low I keep talking about. And yeah, so there you have it, guys. That's what I'm seeing right here in the COT, okay? It'll be very, very interesting how the COT is either going to confirm or deny this move higher, okay? So with that being said, let's move on to the volume and price part of the video. Okay, guys, so now that we have understood the sentiment on both the spot market and the leverage market using the COT and the SMI, we want to go ahead and take a look at what levels prices are hitting and how our USDT bias is looking on both the weekly and the monthly, since it is a brand new month, and how our values are looking. Okay, so to start off, let's go first with the USDT bias. So you can see right here, and I posted this on our Discord group, and by the way, if you guys want to join that, there's a link in the description below. But basically what ended up happening was when we started off the week, we used the weekly USDT buys as resistance. Then we, used the weekly open as support. And the key level right here was exactly this right here. You see how we crossed back above it when we sat right on the level here? We sat, we kind of looked at where we were going to cross back below it. And then by the time that candle closed, boom, straight back up. And that's, the rest is history right there. There's been a 16% rally or more. Let's see. Yeah, there's been about an 18% rally, but right now it's currently at 15%. So there's been about a 15% rally ever since we've been back above the USDT bias level. And of course, that just means that we expect all USDT crosses to be aggressively bullish. Now, that does not mean that Bitcoin is the coin you should be buying. In order to do that, we talk about that in our course and how to analyze that, but it definitely does mean that Bitcoin should be bullish, okay? So now we expect Bitcoin to be bullish on a weekly time frame, and in the purple zone, that's our brand new monthly level for the month of March. That tells us that as long as prices are above that, we expect to be bullish for the candle, right? For the month of March, we expect prices to close above its open. So really, really cool stuff happening here, guys. We've definitely we've been expecting this bullishness to materialize in price based on the way the COT's been looking and all that good stuff. But one thing right now that I keep talking about is how the how we should have expected the second half of this move. So you can see right here, we had just come from the weekly value or low, okay? So those are the two levels you want to be making decisions at, right? The value or high or the value or low. So when you hit the value or low, that was just the most beautiful rally ever right here. And that is a whopping 22 to 20% rally right there, okay? So you hit the weekly value or low. You want to be making a bet to see that it's not going to go any further. And the part that seals the deal is when you then start to bull trend. Remember, when you start to bull trend, that is thin liquidity hitting the market. So a lot of bids will easily be able to crush right through that. And we already knew the market had a lot of accumulation because the long-term players were doing what? They had strong accumulation as you hit that level. You see the beautiful marriage between these ideas and these tools is that they all tell you a different aspect of the market at the time that you need it. So what is it telling us now, right? Now that we are, above our levels and we're bullish and all that good stuff, it's telling us that we should be expecting some type of, retracement because there's a lot of distribution in the market. Okay, so that's when, now that we talked about the weekly model, that's what the green line is, and now we're going to talk about the more broader model, okay? So for the week, we're already bullish, okay? But now we're trying to think, okay, so are these daily candles going to start to give us some retracement here, or is it going to break through? Well, in order to do that, you have to go to your 1 hour chart and see how the daily candles are playing out, okay, using the same exact model. Now, I'm not going to do that here. We reserved that for, the premium chat and all that good stuff, but the whole point is that at this level, this is your important level. That's what I wanted to make the video on. 45,600. That's our quarterly value area low, guys. Look at what happened last time we hit the quarterly value area low right here. Straight down 25%. So the question you have to ask yourself is this the time that we're finally going to break it? Or we'll do what I did last time. Again, you'd have to do that using daily models or 3-day models or whatever you feel comfortable with. Is it going to go ahead and confirm the distribution that we're seeing on the SMI and drop about 10 to 11% right back to what? One, the weekly value area high, right? So that'll be a swing high, swing low. That's not out of the question right there. This, kind of makes some sense here. If you draw a swing low, swing high, that's your fib levels. Will it retrace, right? After such an aggressive price move on Bitcoin, are we going to see retracement back into the monthly support level for the USDT bias or the weekly one, right? So I'm going to leave it there for you guys. This is just to stimulate some ideas for you, and obviously just to know that on the macro sense that we are at a very, very important level, because basically what this is doing right here is it's telling us where the resistance is on this quarterly candle, okay? So when I look at the previous quarterly candle, we're hitting that candle's resistance right now. So if we can go above that, what does that do? It opens up the entire previous candle's quarterly range, okay? And that would be from $46,000 to $60,000. So it opens up that entire range to be able to be traded to, okay? So again, I'll say it one more time. How we react here, that's stuff that we do in the premium group, but you guys can do it, yourselves, however you guys do it. Just know that this is the key defining level. And then depending how we react there, we'll either go back to this weekly or we'll be targeting this 51,400. And that's an even stronger level. Why? Because that's the yearly, okay? So when you think of the yearly candle, exactly what I just did here when I tried to imagine what the range for the quarterly candle will be, you're doing that for the yearly, okay? So with that being said, guys, I hope you found some value in this. I hope you enjoyed our analysis today. Feel free to leave me some questions. Feel free to join our Discord. We would love to have a conversation with you guys there. And with that being said, I'll talk to you soon. Peace.